Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, this is Steve Spencer from Fresh Agenda, Everrag Global Insights team leader. This week presenting the take on global dairy markets alone. Joanne is not available. I'll skip through the usual content. Firstly, a bit of market background, look at the GDT result in a bit of detail and a chart of the week. So firstly, I just want to go through some things that we see as changing in the market, and starting in the EU, and there's been a tightening of the butterfat market. There's some concerns about cream supplies. The latest milk supply data that is a little old now, May, showed that there's weaker milk solids components in raw milk, and that has continued. We've got poor feed quality and probably some good demand side pull. Certainly butter demand is still holding together at very high prices. So with cream prices higher, spot milk prices moving up, the fat market has tightened. Skim milk powder in the EU is also firm, but only come back a couple of weeks. Prices that we've seen slipping in spot markets, but the futures market is a little firmer. There's not much activity in Europe, of course, because it's holiday season and we see most traders away, sipping cocktails in their various retreats. So there is a little bit of product being offloaded that's creating some oversupply in spot markets. Let's see how they line up when we compare week to week in a bit. The other thing that's changing is the US feed market is still profoundly weak. So that's not really going to change milk production very much, we don't think, given the physical constraints on the supply of animals and the structural issues that producers in the US are facing. The other concern in the US is that cheese demand remains sluggish. Prices are too high to spur exports and mixed signals out of domestic demand. So that's a bit of a take on what we see out there. Let's look at how the market movements have gone in recent weeks. So you can see that stronger fat market in Europe, those short contracts and through to November really have lifted up to a couple of €100 a tonne, which is possibly supporting the Oceania market. That's an interesting one to think about. We go to skim milk powder and it is also stronger, but really just clawing back a couple of weeks. The US, however, in the non-fat dry milk market, that is weakened across the forward curve, getting a little worse as we go into Q1 and Q2. And then we go to cheese. The CME market has also weakened across the forward curve, losing probably most in the short term, not big losses, but that's just indicating some worries about demand. So the GDT event had a lot of colour and some unexpected outcomes that were better than expected. Overall, the index moved up 0.4%. It's difficult maths to work through that because we see there quite a lot of movement up and down across contracts within the spectrum of products sold. Whole milk powder was a lot better than expected. The futures market was suggesting a loss of more than 5%. This came out with 3.5% down. Middle Eastern buyers probably held this together because they came back from several periods on the sidelines. The other thing in whole milk was the fact that we've seen some reduced availability of instant product, which has bolstered some of the results within those smaller categories, which does help the overall average a little. Skim milk powder sort of drifted sideways. We have seen small changes there, a little worse for European product. But the big surprise was AMF, which has clawed back some of the losses in contracts 2, 3, and 4. They were healthy results given where the market had moved and given the availability of product. Butter was quite mixed in contracts other than the first, but in those spot contracts for both AMF and butter, we saw clearly some exposures to short-term tightness or lack of availability that's caused some buyers to come back. It's driven the AMF price to the highest ever. We certainly talked about record prices recently. This time we're back there on C1 and the best AMF price we've seen. The contract couldn't quite get to a record level. It still fell short by some $350, but still a pretty impressive result. And cheddar has clawed back some of the losses from a couple of events ago, and that's pulled it back into a closer alignment with its competitors. When we look at spot comparisons, skim is all leveled up and staying leveled up. We see butter doing its usual thing with Europe still higher, and the same in cheddar with the US now the cheapest in respect of that market. Demand was surprising across the board. We haven't seen the chart look like this for several events, where we have slightly above average demand, and the average is going back over 4 years. We've got, however, weaker demand on skim milk powder, yet its result was close to the last outcome. So it's always a confounding thing how the demand works and where the prices end up relative to previous events. In terms of butterfat, this is, again, the surprising result, how we've seen this little kick in the butter values, this taking index and just comparing to the seasonality of prices over a long period of time. This has followed, 24 has followed the 2023 pattern, but now we've seen this little surge, which is quite atypical. So let's see where that goes in future events. Skim milk powder forward curve really didn't change much. Shorter term gains, losing later. AMF graphically shows there it has clawed back only some part of what it lost in the last event. And as I said, maybe some relief with Europe being a little bit firmer out there in later periods. And cheddar certainly has clawed back to where it was 2 events ago through those earlier contracts. And it'll be interesting to watch how this lines up compared to the US going forward. In terms of skim milk powder, the difference between European and New Zealand product remains similar. It was a reduced last event. We saw this one. Really, the average hasn't changed as a result of this. The losses for Arla were a little bit bigger than what Fonterra lost in the C2 contract. In terms of who bought, well, China disappointed in whole milk, remained disappointing in whole milk powder. There were higher volumes on offer. They lifted slightly. However, skim milk powder, that went sideways despite more product available. So that is quite disappointing. Southeast Asia came with whole milk powder. It couldn't quite get to where it was at the last event. And as I said, Middle Eastern buyers came in and essentially picked up the difference that was left behind by the other buyers. And in skim milk powder, this was a positive outcome. And I think this is probably the takeaway. Skim milk powder buying in Southeast Asia as volumes increased, they followed that up. The percentage was back above 40%. This is the best volume at this event in 5 years into that region. The discount for synthetic value of whole milk powder is wider. So whole milk powder, more of a bargain when you consider it on fat and protein basis, increased past $600 a tonne and the largest discount since November 22. Might just bring certain buyers back to the market if they're looking for full fat product. So where does it leave us? The forward butter comparison, we still see a yawning chasm between New Zealand and European prices, certainly out into later parts of the year. So that will remain interesting as we see more product come from New Zealand. Skim milk powder is also interesting. We have seen there's still great hope for those later futures in New Zealand, but Europe and US futures are still well ahead. And the cheese comparison, as I said, the GDT prices don't quite come up to where the US market's been, so that's probably going to continue to challenge that forward curve in the US unless domestic demand picks up. And there's a good discussion by my colleague Phil Plort on this morning in our other call where we did discuss the challenges here in the domestic market. So that's a wrap on GDT. Look, where I'd like to finish, and me being here by myself, there's no real democracy in selecting chart of the week. I'm going for the EU skim milk powder exports. That data came out overnight. We processed that and done our usual regional carve-up of what's occurred in the export trends. So while it's not the greatest volume per month, it's still impressive when you go back and look at what's been booked. It was down year on year in skim milk powder, but just those interesting patterns. The North Africa market's still quite strong. The Middle East is weakened a little, but that's Asia's almost back to where it was last month, but still quite an interesting set of numbers. When we look across commodities, however, Europe was down 5.4% year on year for the month of May. That's mostly driven by weaker skim milk powder. Whole milk powder also down quite a lot. Cheese was flat. Whole milk powder down significantly in MENA and Africa. So those regions have certainly pulled back as on European product with cheaper product from other suppliers. Skim milk powder volumes, they were close to the 5-year average in the month, so they were better than expected. I'm trying to pull out some positives there, but skim milk powder trade is still reasonably healthy out of Europe despite the lower availability. We did, however, see the highest dry whey month ever due to strong buying from China and Southeast Asia, which is also a positive take. It would help tighten up that market, which in Europe needs that. Pretty strong WPC 80 trade, also a very strong month. Not quite the best on record, but going back several years before you find a volume that we achieved in this month. So that's a wrap on where things are globally. We'll be back next week, hopefully two of us. Until then, thank you.